Alrighty, so as mentioned in the morning notes, the only trade I'm interested in today when it comes to QQQ is if they can come down towards this 536.30 to 535.92 zones. If they can get back to this level and on NQ, that's where the 5-day moving average is as well, somewhere coinciding with yesterday's lows. So what we're expecting is a little bit of a bounce, maybe to come back down and maybe a bounce towards the VWAP for a reversal trade sort of thing is what we're expecting for. And again, depends on it's not if the price gets there, how it gets there matters more. So it'll be better if it happens within the first 15 minutes with an aggressive push to the downside and buyers immediately picking back up. That'll be great. That is what I'm expecting to happen. If it happened, I'll take it. If not, we're gonna wait. So yesterday in the live, we got into starter positioning for bros. And I'll let you guys know if we average up. For now, there's no reason to make any changes. The better place to add more will be if they come back down towards 83.45 and change. And I'm going to wait for the 5-day moving average to catch up to the price. If you're new here, 5-day moving average is if you can find the 5-day moving average by just going to indicators and typing level up without any space, and you'll see it from John Muckshaw. That's what we are using right here. So that's what we're doing today. So waiting for bros to set up, and there's another stock which we are watching for a potential new positions. That will be Mastercard MA. So this has been performing good, and it's been consolidating for quite some time. And now they just got back about the AVWAP from the earnings, and you can see it if you go to the daily candles. Let me switch up right here. So as you can see, they gapped up after earnings, and they were just consolidating right here about the AVWAP and let's give it until like 15 more minutes, perhaps. Give it a 15 more minutes. And if they do hold above the VWAP, I will be entering a small position right here with stop losses at 558 and change. The ticker symbol is MA, and it is kind of a pricey name. So just if you cannot afford to buy, if you're dealing with a smaller account in particular, and if you can't afford to buy at least 1.5 to 2 shares, well, sit this one out. It's all right. So you can't take every single trade, especially if you're trading with a smaller account, and this is just one of them. If you cannot afford to buy at least 1.5 to 2 shares on this name, there's no reason to get into it in the first place. But if you're having a sizable account and the total risk which I'm planning on taking initially is 0.4%, and I will average up if they can clear this 571 area. Pretty sure it's trading at all-time highs as well. So it's a great looking name, great looking chart. There's no complaints here. I'm going to give it until at least 9:45 to 10 o'clock maximum to see where the price settles at, and then we can deal with it down the line. So this is MasterCard. And again, this is for shares, by the way, don't do options. And if it's options, I'll let you guys know. As mentioned yesterday, just shares. And if you can't afford to do shares, you can't afford to do options either with your account. So don't buy way out of the money options like 580, 590, 600 calls just because it's cheap. Sometimes it's just not worth it. With shares, you can just hold on to your positions as long as it works out or as long as it stops you out. But with out of the money options, you are tied to the time. So it has to work out within that particular time. Using technical analysis, you can get a probability of what might happen to the price, but you can never get the probability of when it will happen. So time, you don't want to get stuck with it. For now, for this one, stick with shares. I'll let you know if I open any options, and we'll deal with it down the line. The ticker symbol which we're talking about is MA. So with that being said, Tesla has been doing great so far. The first 5 minutes is over. As always, mark the ORB highs, mark the ORB lows, mark the VWAP. Now let's go back to the QQQ. Let's go over the text. What do you guys have? Good morning, good morning. Hello, Leroy, Chris, welcome. Bill, welcome. Michelle, Sheila, Tara, good morning, everyone. Thank you for tuning in. Appreciate it. All right. So with that being said, let's go over Tesla to see what's happening. Do we have any moving averages nearby on the name? Let's see. Is this a free class? Yes. You're here, aren't you? You didn't pay anything, so it's free. So when it comes to Tesla, if you're looking to swing trade Tesla, it's pretty simple what we do. Like it's under the 50-day moving average, it's under the declining 20. What I'm looking for is at least a push above this 380 zones. I know, like, if you got in here, buy low, sell high. Yeah, but it doesn't work out with me. Like, it's just for me, there are certain rules which we have for swing trades, which we stick to it regardless of what the price does. And this is one of them. If the stock price is under the 50-day moving average, we don't swing trade it. We will wait for them to set up. I would happily buy this name way above $400 at the higher low and take it all the way towards 480 and still make the same amount of money rather than buying it right here, trying to call the bottom. These types of names need a lot of patience. So please be patient with this until the trend proves you otherwise. Or if you're a reversal trader, there's something for everyone in this as well. So the best thing to do to gauge if the buyers are holding the control, and if you're holding shares, if you want to buy shares, anchor the VWAP to this recent close right here, which is currently at Feb 11 330 candle. So that AVWAP, it's going to tell you whether the buyers who bought this lows just like you did, or whether the institution which bought this low, are they making money or are they losing money? So every time the price comes back down towards this 348s and change and find buyers and start pushing back up, it's going to offer you a chance to average up. And if they break under this anchored VWAP coming from this low, so you can just cut it for a small loss and move on. So if you're going to enter Tesla right here, the best way to approach this is watch the VWAP and watch the ORB. And if as long as they hold the VWAP, as long as they hold the ORB, and if you're swing trading, look at the ATR, $18. So you can just set your stop losses at 340 flat, and from your entry price, and your targets will be this 380-ish and change for the first trim, and this gap fill at 404 for closing majority of your positions. This will be for swing trades if you want to take Tesla. Again, it's not my type of trade. I won't be taking it because it goes against my set of rules, but that doesn't mean there is no trade here and you can't approach this in multiple ways. So one of the ways which you can approach is, well, just explain. Now they're above the ORB lows and they're above the VWAP. And if you want to wait until 11, like how we are waiting for MA, you can do that as well. Let the price settle down and then like you can get back in it. So let's see if we can enter MasterCard here with a perhaps, what's the ATR on this? Don't be a slow mover, 792. All right, so 562, 558. Let's do it. Let's do MasterCard. I'm going to enter a small position here on MA. Let's see. All right, done. Stop losses will be at 558 and 0.4% risk. Let me just send out whatever we just did. Small positions on MA established here. Cost average currently is 569.80, and total risk is 0.4% of my entire account. MA established. Total risk 0.4. Stops 358. I don't know if Cranky Boomer is here, the user. He's the one who explained it yesterday. So I need a loan to get MA shares. Now you're letting me hold something. Hey, if you can afford 2 shares, you can afford the position. That's it. Simple. Even if you're holding a smaller account. 2 shares in particular, because with 1 share, you can't manage the positions properly. So if you have at least 2, it'll be helpful to trim when it's time. I mean, you can do it, like some brokerages allow partial selling of shares. You can just buy 1 share and sell 0.25 of those shares when it hits the 1 hour, 0.25 on the same shares when it hits 2 hours. Well, you can do that as well. So if you can buy at least 1 share, that's great too. You can partially sell it now and then as it hits your profit taking target. What is he doing with MA? I just bought some shares, like stop losses at 558, and it's for swing trade, and the profit taking target will be 569 minus 558. We're risking somewhere around $11 ish. A bit of 1.4 ATR stops. and we need it to go at least to 581s to start trimming. It's a swing trade and just shares, not options. If it's options, I'll let you know specifically. And just remember, if I'm wrong, I won't be losing more than 0.4% of my entire account. That is the risk. If you want to calculate what will be 0.4% of your account and how much will you lose if you're wrong, how many shares you need to buy to accommodate to the 0.4% risk, I just sent out the position sizing calculator Excel sheet in the Zoom chat, download it, plug your account size, plug the values in there, and it's gonna tell you. So this is what is going on with the firm today, down 3%. 358 or 558. There is no way we are sitting at 358 stocks on MA, by the way. Did I put in 358 on MA? Oh, my bad, man. 558. Thank you for letting me know. Thanks, Joe. Appreciate it. It's 558. It was a mistake from my end. How did you know where to take profits on MA? It's pretty simple. Like, take your cost average. Let's say you bought shares at 569. And now write this on. It's very easy. You can calculate it on your own, by the way. Your entry and your stop loss. Write those two values down. If your entry is at 569 and your stop loss is at 558, write those two values down and subtract your entry value from your stop loss value. You're gonna get somewhere around 558 minus 569, $13-ish. You're gonna get. So now, since the total risk is $13 per share, you need to wait for the stock price to get $13 from your entry price to the upside. So which means your first profit taking target will be $13 from your entry price. And the second profit taking target will be $26 from your entry price. And the third profit taking target should be $39 from your entry price, which is 1 times your stop loss, 2 times your stop loss, and 3 times your stop loss. So that's how we do it. It's as simple as it gets. Like, it always comes down to where's your entry, where's your stop loss, and the profit taking targets will be 1 times your stop loss to the upside, 2 times your stop loss to the upside, and 3 times your stop loss to the upside to close majority of your positions. So I hope that makes sense, by the way, when it comes to profit taking target, because let's be real, we don't know what the price is going to do. And if it didn't go in our favor, all we have control over is our stop loss and the total risk which is exposed. That's all we're doing. We're initially starting small, and down the line, once it starts working in our favor, we'll average up along the way and increase our risk from 0.4 all the way up to like 1.5 to 2% maximum in a particular position. It's very rare for us to hold a 2% in a single trade because we will be always in multiple positions at the same time. So this is just, I don't think this is going to be any exception at this point. We'll wait and see. Looks like the firm is losing foot here. And now they're above the 5-day moving average. Yeah, they're testing the 5-day moving average on a firm. So we'll see if they can recover the VWAP here or not. Meta, I had some chats about it yesterday and saw some posts which is telling support and resistance for every $2 once. $18 ATR. Meta, if they can come back down towards the 693.81, that's where the 20-day moving average is, and that's something which I will be interested in to see how the price reacts. Right now, if it's still an uptrend, but again, the price just been continuously rallying all the way to the upside, I would be much more confident on a low risk entry if we can see at least 642s, a steeper pullback, or at least a higher low lock. Maybe that'll happen. It's still an uptrend. There's no reason to call the top on a name. So if they can come back for intraday, if you're trading, if you're day trading, if you're looking for reversals, pay attention to this 693.69 zone to the downside. If you see the opening price is 704 and $18 ATR puts it right, the bottom range at around 686 and change. So maybe if they come all the way towards 686 and complete one ATR today, if they turn out to be a trend day to the downside and then slowly push back up, that'll be a nice reversal trade. And wait for it. They're under the 5-day moving average anyway. There's no reason to open any new swing trades at this moment. Maybe perhaps if they get back over 722, we can consider. It depends on your time frame completely. So let me just repeat whatever I said because I felt like I went over it a little bit faster. So if you're gonna day trade this, simple way to deal with this is look for the VWAP, mark the ORB highs or ORB lows. If you don't know what ORB highs or ORB lows is, the 5-minute candle you see, mark the highs of that 5-minute candle and mark the lows of that 5-minute candle. That's going to be ORB highs and ORB lows on the name. And you can see they're struggling under the VWAP. And if you're looking to buy puts, well, your stop losses should be at 707.50-ish and change. But for now, the best thing to do is if you're a long base trader, if you just want to buy calls and if you're not interested in buying puts, wait for them to get back over this 690 to 693 zones. That's where the 20-day moving average is. And the price just gapped down under the ERAV VWAP. The best shot for this will be a rejection at the 5-day moving average, or perhaps at 709 and change. It's going to give you a low risk entry. And if you're entering right here for the short position, your stop losses should be at 707 and you should take your profits as they near that 693 for a 1-hour trade. So swing trades, be patient. Not the right time to enter anything. Missing it, where do you know how to set your stop losses? For the AV map, what are you measuring the highs, lows of what time frame? All right, let's start with the stop loss question. And before we get to these questions, hints I still have runners. Great job. Like that thing has been going absolutely nuts. Looks like it took the pills off its own. This thing's not stopping. Good name. So before we go on to the questions, so just want to cover the stocks which we entered yesterday. Not entered, we spoke about yesterday in the live stream. The ticker symbol is SOC. And the entry was around $30. It's looking good so far, pushing back up again. And YUM, you're still waiting on it. Let them recover the 5-day moving average, and then we can deal with it. There's no reason to average up right here. Affirm, keep an eye out for the 5-day moving average. And if they can't recover the 5-day moving average, we're just going to close the other positions, whatever we got on the table. There's no reason to keep holding on towards them and take it all the way towards break evens. And the last one, which, what else did we get yesterday? Let me see. We got Bros. Yes. The last one which we got was Bros with a smaller positioning, and if they can come down towards this 83.50, that'll be great for the other positioning which we have. Currently, the risk exposed is somewhere around 0.4% on Bros, 0.4% on MasterCard, which is 0.8% of the entire account. And we got a firm with somewhere around 0.3% exposed and 1.1% risk. Yeah, around the same. That's it. So we got somewhere around 1.1% of our portfolio exposed. So what I mean by that is if everything stops us out, which happens, which is pretty common. If every single name which we are holding stops us out, we won't be losing more than 1.1% of our entire portfolio. So if you're trading with a $2,000 account, that'll be somewhere around $22 and change. That'll be the total risk. And if you're trading with a $20,000 account, still doesn't matter. It's still around $200. We're talking about 1.1%. That's going to be same regardless of whatever portfolio size you're trading with. That's the importance of position sizing. And this is why sizing the positions properly is going to help you think straight and learn more about position management instead of just filled with adrenaline when you're trading options. That's not going to help you learn anything. Something to keep in mind. So with that being said, how do you know where to set your stop losses? So let's go with MA. Like, how do I know where to set the stop losses? And maybe this example might offer some insights. So MA, the first thing I start with, I go to daily and look at this thing called ATR, average true range. So what's the average true range is going to tell me is what's the range the stock has been having on a day-to-day basis. And for MA, you can see the value is 8.01. So which is telling me the stock can either go up $8 or go down $8 every single day on average. Doesn't have to happen every day, but on average, it can go up $8 or go down $8. All right. So now our entry is at, let's assume 569.30. All right. So what's the opening price of MA? Opening price of MA is 567. Now calculate the range. What's the range? If the excuse me, if the opening price is at 567, easier thing to do is just add the $8 to that 567. You're going to get the upper bound range, which is 567 plus 8 is going to give you somewhere around 575. And to the downside, 567 minus 8 is going to give you somewhere around 559. So that is the range we need to be expecting on this name to the upside and to the downside. All right. So now downside range is 559 and change, correct? So you're going to look at the daily chart and see if there is any lows near that range, which makes sense. So right here, if you look at the daily chart, you can see the same lows, this zone right here, where the price been touching and wicking us out over and over and over. Every time it touched it, buyers stepped in, push it back up, pushed it back up. So near that same zone, near that 558 zones, there is this area of interest. That is going to be your stop loss. That lows right there. You're going to use ATR. And after using ATR, you're also going to look at the daily chart to see if there is anything which is significant over there. Something to keep in mind. So this is how we set our stop loss. First, we look at the ATR and get the range from the daily time frame. And after that, once we get the lower bound range of the ATR, nothing, it's pretty easy to calculate. Look at the opening print. You can see the opening price right here, where my cursor is, where it says, oh, today's opening price is 567.49. Add and subtract the ATR value into that. All right, when you add and subtract ATR value into that, you're going to get the upper range and downward range for that particular day. So the downward range which we got was 559, and near that 559 zone, there is this area of 558, 50-ish and change where the price tagged and bounced over and over and over again. That's our stop loss. We're also going to look at the higher lows near that ATR. So that's exactly what we did. To have correct position sizing, you have to allocate half of your account if you're opening two positions, 1/3 if you're opening. How much you allocate for each positions matter less. How much will you lose on each positions if you're wrong matters more. Hope that makes sense. For instance, if you have 3 positions open, how much money you put into each of these positions matter way less. For example, if you buy 10 shares of MA, you're allocating somewhere around 5.8 grand on it, $5,800. But if you're buying 100 shares of a firm, you're allocating $7,800 on it. And if you're buying like 100 shares of Yum, you're allocating $14,700 on it. That really doesn't matter. So what matters more is how much you will lose on each position. So maybe like even if you spend $5,000 on buying 10 shares on MA, if your stop losses is somewhere around 558, the maximum you will be losing is somewhere around $100 on this name, even after spending $5,000 on this. That's your initial investment. Initial investment doesn't really matter. How much you're gonna lose if you're wrong, if it stops, gets hit, that matters. That's all we care about. You can put in your entire portfolio in a single play, but if you're wrong, if you won't lose more than 2%, how much you put in doesn't really matter. How much you will lose if you're wrong matters way more. That's where position sizing kicked in. Position sizing is not the amount of money you put into each play. Position sizing is how much, even if regardless of how much money you put in on each play, how much will you lose every time you're wrong? That's where position sizing steps in. How to translate options and stop loss. Pretty simple, man. Like, are you aware of Greeks? If you're aware of Greeks, check the delta. For instance, if you're taking the same trade on MA with options, and if you got in at 569, and if your stop loss is at 559, you're setting $12 to $13 stops. And if the delta is somewhere around 0.60 when you buy it, it's 0.60 into 12. That's going to give you the risk. And please don't do weeklies because some of the plays can take multiple weeks to play out. And for instance, like we've been holding on to Yum for quite some time now and no changes made to the positions. So if you're going to trade options, get in the money options at least 21 days to expiration at minimum. If you cannot afford it, don't cut costs and go for out of the money options for 21 days, way out of the money, like 800 strike price because it's cheaper. You will be making more money by just buying the shares rather than buying these options right here, which is way out of the money, like 40, 50, $60 out of the money options. So best thing to do, like if you're getting in the money options, just use the delta and like take the stop loss, take the risk and multiply the delta with the risk. You're going to get an estimation of how much you're potentially going to lose. And of course, delta is not a constant value. It's going to keep on changing as it moves in your favor or keep on reducing as it moves against you. That is something to keep in mind as well, but it's going to give you an estimate of how much you might potentially lose if the trade didn't go in your favor. If you don't know what delta means, to put it simple, delta, it's just the amount of money you're going to make or lose for every dollar move of the underlying stock price. That's it. That is delta. Looks like SOC is halted. Yeah, correct. It's not moving. There is nothing happening. We're still in YAM? Yeah, we're still in YAM. There's no changes made. You're getting back over the 5-day moving average, and same with the firm as well. Like we need the firm to get back over 5-day, or we're going to close this position altogether. So we'll wait and see. Hope the option stop loss question made answer made sense. By the way, if it still confuses you, let me know. We can talk about it more down the line. And when it comes to day trades on futures, what I'm looking for is maybe perhaps a tag towards this 536.33 to 535.90. Depends on what happens there. We can deal with it. SMCI, I think we spoke about it yesterday, declining 200. And did they get back over it? Looks like they did, didn't they? Yep, they did. All right, so best thing to do is if you notice on the daily, they just rallied from $37 all the way to $58 back to back without any pauses. Wait for them to log a higher low. By higher low, what I mean is you need to see the price come back down, consolidate for a while, and then start pushing back up by recovering the 5-day. And once you have that higher low log, you'll have a nice area to set your stop losses on your swing trading positions. So you can see the 200 is kind of starting to flatten out here. It's going to take some time. And let's wait for this weekly candle close. I'm in no rush to get into this. If you go to the weekly charts, you can see there's a rally back to back last 3 weeks from $26 all the way to $61 with no gap at all. Let them have a slight retracement. Let them have a slight retracement, and we'll be having more than enough time to get involved on the same name. Don't rush into it. Don't chase it. The worst thing you can do is chasing this right here, right at the top, especially with a declining 200. Not worth it. Don't FOMO. If they don't pull back and if they continue to keep going, well, we just missed it. That's fine. We miss out on hundreds of trades every single day, and this might be just one of them. Tesla has been doing exceptionally well today. Maybe test of ERAV VAP at 366 and change. See. Let me go back to NQ and see if I can take anything on the top step at this moment. I'm just going to set some price alerts on NQ at around 22,012-ish. If they can get back down towards this level and find some buyers right there, I will perhaps be interested in taking a long position, provided the buyers step in right there or some sort of consolidation happens right there. If that doesn't happen, I'm generally not interested in opening anything. Tesla just moved $11 to the upside from the entry price. What's the ATR? ATR is somewhere $18, right, on Tesla? Yep. Maybe perhaps towards a 366-ish is where we're gonna see some sort of a jittery. But again, the funny thing about price action is do you see them how they're not getting to that level but consolidating right under that level for quite some time, building up energy? So whenever you see these types of things happen, you can notice more you watch the charts, the more you're going to observe these things happen. Let's say you have a resistance level right above and the price is just consolidating right under that resistance level for quite some time. But they rejected it, but they're not going all the way down. But every time they go down, the buyers immediately pick it back up to test the same level again. Whenever you see these types of things happen, most of the time they're just building up energy to burst through that resistance level. So something to keep in mind. I'm not saying it's going to happen with Tesla, but most of the time you're going to notice these types of behaviors from the stock. If they have a particular area about, they're just going to build energy right under and burst right through it, provided the markets cooperate with the name. So when it comes to NQ, they're getting near towards that 5-day moving average at around that 22,100 and change. Depends on what the price does there. We'll deal with it. Morningstar on what time frame? Hims also had a big move. Yep. They've been on a ramp up lately. It's been going absolutely nuts. Beautiful name though. But last time we traded this somewhere around $20 or something, right? If I remember it right. So if SLC starts trading, let me know. Yeah, sure. So YUM, maybe perhaps it's time to average up on this. Let's see. Da, da, da. Maybe two more shares right here. All right, so I just added another 0.2% risk to YUM right here. And YUM reached out. And I had to get rid of some of my affirm positions in order to accommodate this risk. So what I did was I got rid of 0.15 of my affirm and put that risk into YUM. Apologies for talking in slow motion, so I'm just multitasking, changing stuffs in my portfolio, and then updating you guys about it. So bear with me for a moment. Right, affirm is removed. Yum, bros, and okay, so everything is solid. Interesting. Okay. Did you go over Meta? Yes, we did. 692 is what we said, correct? 692 to 693, if they can get back down. That's the area which you're interested in. So currently, I think the risk on YUM is somewhere around 0.6%, correct? 0.6%. And if you're trading with smaller account and if your risk is going overboard about 2%, feel free to reduce the sizing on MA and Bros and then drop it into something which is actually working, because both Bros and MA both are just starter positions for now, which means if you're wrong, we wouldn't be losing more. That's the point of these starter positions. But with EM, we are almost at the zone of completing these positions. So the stop losses on those, let's say, let's keep it 0.6%. Current average should be somewhere around, let's see, 144.80. That's the current average. If it's 144.80, stop losses, let's put it at 140s, right? So 144.80 is the cost average, 0.6%. Stop loss will be at 140 and change. Let me just type it out here. So if you missed out current positions, today, MU total risk 0.4%, and stops 358, and YUM averaged up be 0.6%, stops 140, and our firm trimmed total risk right now is 0.15%. That's it. So I just posted in the Zoom chat for whatever we did in today's live stream right here. So What we did was just manage the portfolio, manage the positions by looking at the risk. That's it. That's all we're doing. How much risk we are exposed and how much will we lose if you're wrong, and just changing the positions to accommodate the risk. That's it. SPY is forming the same opening as history. Do you think it'll be the same type of markets? Maybe, maybe not. Maybe they're going to come down towards the 607 first to run a test towards that 5-day moving average. We'll see. And for SPY, wait and see how they react around the 609 to 607 zone. If they break under 609, most likely they're going to come and run a test towards the 607.95. They're under the VWAP. That's all that matters. Under the VWAP, guilty until proven innocent. All right, NQ, come on, test it. Almost there, near the targets. For a potential long trade on NQ is what I'm looking for, maybe around that 103s. Perhaps a liquidity grab will be nice. Massive red candle and then slowly inching our way back up, sort of thing. We got 112 people. That's nice. Thank you for taking your time and tuning in. Appreciate it. All right, so no positions in so far, and kind of being very selective on the trades which I take on my live accounts at this point. We'll wait and see. Maybe perhaps towards this 22,100. If it's not going to give it to me, there's no reason for me to enter anything. If it doesn't give, see, same scenario. If they don't get to this level and they then keep going back up from here, well, I missed a trade. There's no reason for me to enter anything at the moment. So it looks like it's breaking out. Well, still got a long way to go if that's what breaking out means. But at least on an intraday basis, perhaps we'll see. See this right here. This needs to go up as well if you need Tesla to go higher. You can't have Tesla going higher if we are having weakness in NASDAQ. If NASDAQ is also going up, it's gonna put a fire under Tesla's ass, pushing it even further higher. But if NASDAQ is showing some weakness, need to be a bit more cautious. 180R puts Tesla right there at around 368 zones, so they can burst through. That's what we'll be looking for. So the chart which you see on the right hand side of the screen is called as NQ, and if you're not familiar with futures, it's same as QQQ, just different contracts. You trade options on QQQ. I trade futures contracts on NQ, so it's the same thing. It moves exactly the same, just different contracts, the different way to make money. That's it, or lose money, regardless. So come on, get to the 5-day tested. As discussed before, do you see how they consolidated for a while? What happens to the price? Just a certain price action things which you notice the more you observe the charts, by the way. The more they consolidate under a particular resistance level, if instead of sellers being way too aggressive at the same, it's not worth it sometimes, or it's not worth it most of the time. There comes the break on Tesla. You can see on the 5-minute time frame, there is an area of interest at 366, and you can see how they consolidated right under it before even getting there, and now they're bursting through. You'll see the same sort of behavior in multiple stocks, and the same thing goes to the downside as well. You'll have a support area at a particular zone, but price, instead of getting there, will just drop all the way near that support level and consolidate above for quite some time, only to give a massive flush down to the downside. They're just building energy for the push to the upside or to the downside. It's a pretty common thing to notice. And this, you can see it in the 2 minutes, or you can see it in the 5 minutes, and you can see it in the 1 minute even clearly. What happened before this breakout happened? What happened before this breakout? The markets can be funny sometimes where like you'll enter the trade with stop losses right here at the lows of that consolidation zone. You'll see a huge wick right downside, hit right to the downside, taking the stops and then bouncing right back up. That's what we call as liquidity grab. And those types of pushes to the downside should be used as an opportunity to enter into the trade to the upside. So something to keep in mind moving forward. If you missed it, you missed it. Don't worry about it. But down the line, you're going to come across these types of setups on a daily basis, or at least weekly once you're going to come across these types of setups in multiple names. Keep an eye out for it. Might come in handy down the line if you're scalping or day trading in particular. We did not get a tag at the 5 day. Let's anchor the VWAP to the 930 candle. So I kept pushing back up. All right. So we set our alerts right there, and I'm not interested in the trade anymore because they just rallied a little bit above. And if they come back down, the level is not the same anymore. Anyway, we'll see. Let's see how it does around this lows of 103s. So MA, what else did we add today? YUM. Bros. All right. So for bros, I'm just going to set some price alerts right here at 83.50-ish. If it gets there, we can just add more to complete our positions. Still about the 5 day, the better they pull back now towards and let the 5 day moving average catch up to the price rather than going all the way, getting overextended and being a pain in the ass for us down the line. Delete it. Yes, I don't need it. And same with MasterCard. We need the MasterCard to break about this range right here, maybe perhaps about 570. So if that happens, good for us. Oh, we got a good question. If MA is at 568 and I want to put a stop loss at 567, what's the value I've been putting? There is no point in putting a $1 stop loss on a stock which has an ATR of somewhere around 7 to 8, by the way. There's absolutely no reason to. It's just too tight of a stop loss. And most of the time, what's going to happen if you're putting a stop loss that tight is it's going to start working in your favor and you're going to immediately get stopped out, and only to see it work in your favor down the line. So there is an ATR there for a reason, by the way. And $1, like it's like setting $1 stop loss on Tesla. It's just how many times, like, have you seen stock working in your favor and or just pulling back a little, stopping you out, and then immediately going back up? So just an example. Yeah, it's fine. I understand, but I'm just explaining because it's most of the people actually do this. But if you're going to set a $1 stop loss on any stock, let's say 568, let's say you're going for 570, let's look at it. 570 for weekly expiration. Let's see the price of the 570 calls on MA. Let's go to MA's option chains. Feb 21st expiration. 570 call is currently going for $262. And the delta on those is 41. So let's say you're setting a $1 stop loss by entering at 568 and your delta is 41. So technically, if they go down to your $1 stop, maximum you're going to be losing on that contract is around $50. That's it. So look at the delta. If you open that option change, you'll see something called as a delta in there. So the delta is currently 0.41. So just multiply that value with 100. The delta is what's going to tell you how much money you will be losing or making for every dollar move in the stock price. So as the stock price moves lower, the delta is going to go lower as well. As the stock price moves higher and moves in your favor, the delta is going to keep increasing until it hits 1. At that point, your option chains or your option contract is just going to mimic you holding 100 shares. So if you're just putting a $1 stop loss, look at the delta. If the delta is 0.41, just give it some leeway with theta and all those other things. and you have to set your stop loss, let's say $50 to $55 from your entry price. With a stock like MA, it's gonna hit instantly. That's the problem. But if it's a stock like Palantir and all those other things, it's you might get away with it because the delta on Palantir is somewhere around 3 to 4, and $1 stop loss is pretty decent, especially for day trades. Are there negative and positive deltas? Yes, put options have negative delta and call options have positive delta. And if you're selling a call, you'll have a negative delta. If you're selling a put, you'll have a positive delta. But in reality, both works the same. Both works exactly the same. The negative delta doesn't mean you'll be losing money for every dollar move to the upside or to the downside. It's just put options have negative delta, call options have positive delta. That's it. But both works exactly the same. It's telling you the exact same thing. I need to know the input file. Yeah, we already went over it. Where do I find the printout on risk management in your Discord? What printout are you talking about? Is it the position sizing Excel sheet? I just shared it in the chat, and I'll be okay sharing it again. I have it pinned in my computer so that like we can have the easy access to it. So you can just download it from the Zoom right here. So what I'll do is like I'll just code this out in my website so that you guys don't have to keep inserting the values in an Excel sheet and opening a different app. So I'll just code this thing in my website and then have a separate page for position sizing alone so that you can just go to the website and then plug in the values and then get how much shares you need to buy. That will make everyone's life way so much easier. And also it's going to gain more traction to my website as well. There's something to be gained from me and there's something to be gained from you too. So it's a win-win for both of us. So I'll work on it. I'll let you guys know once it's done. So we'll see. So I just shared the Excel sheet for now. So we'll work with what we got at this moment. This is what we got. So go ahead, explore the Excel sheets. And if you have any questions in the same, let me know. It's the one, you're talking about the video. All right, got it. I'll send it to you. If you're in my server, go to the beginner's guide and it should be under the step-by-step. Right here. I just shared the video directly, so you can go and check it out. And you can just copy paste it, all this in your notes, all our videos which might help you. The title is there, the link to that videos are there. These are the videos which I made when I was making YouTube videos, and right now I lost interest. But if you guys find it helpful, you can make updated versions of the same. Yes, you read it right. The first video is how to lose 100% of your portfolio. Give it a watch. You might find it helpful. And if you guys notice something, we entered MA at 569.50-ish, and right now it's down $3. And do you sense any sense of panic or anything coming from any of the members who's been trading with us for quite some time? Absolutely not, because of the initial risk. Initial risk is somewhere around 0.4% of the entire account. There's absolutely no reason to keep looking at the 1-minute candle or 2-minute candles and panicking if it's working out or if it's not working out. If it doesn't work out, it doesn't work out. If it works out, great, we can look for opportunities to average out. And if it doesn't work out, we're only going to lose how much? Only 0.4% of the entire account. And that is going to take out all the panic away, and it's going to help you think straight and taking the markets as it is. Panic comes only if you are over leveraged. Selling a positions early only happens if you are over leveraged. There's absolutely no excuse to do the same because that is something which you have in your control. And the only thing which we have in our control is the position size in which we take. And if we are not sure about the position, but if we still want to get our feet wet, always size down. Size down, and if you're wrong, we're wrong. If you're right, well, we can always average up down the line. Start small and then slowly average up as it starts working in your favor. Never add to losing positions. There you go. Like small things like this is going to have a massive improvement in the overall performance year-to-date standpoint. So something to keep in mind. It either hits our 1 hour for the first trim or you're going to get stopped out. There's no in between. When do you use the AVWAP? All the time? Can you show how to use or what time frames? Yeah. So think of it this way, correct? So whenever there is an earnings, you see a stock either gapping up big time or gapping down big time, correct? So for example, take MA, that's something which we just entered, right? If you take MA and go to the daily charts and they reported earnings and you can see a nice little gap up on the MA's chart right here. Did you notice on Thursday, Jan 30th? So there are multiple other examples as well. So if you go to a firm on trading, yeah, if you go to a firm, you see a massive gap up there as well, like nice gap up on Feb 7th, right here. So whenever you see these types of gap ups happen on the chart, if you go to YUM, you'll notice that as well, a big gap up right there. So these gaps are always accompanied by decent amount of volume as well. So right here, if you notice on YUM's gap, the volume was 5.57 million for that particular day. When on average, the average volume is just 2 million. So on that particular day after the gap up, you see somewhere around 2 to 3 times the average volume being traded. So it just indicates you there is some institutional participation. So those are the type of candles which you anchor your AVWAP to. So the AVWAPs which I got anchored on SPY or Jan 2nd candle, that's going to be the year-to-date anchored VWAP. So that's going to tell me if the buyers who purchased the first day of the year, are they making money or are they losing money? If the SPY is trading above this year-to-date anchored VWAP, which is coming from Jan 2nd, it's going to tell you the buyers are in control. Average buyers who bought the SPY at Jan 2nd are making money. If the price is under the year-to-date anchored VWAP, it's quite the opposite. Average sellers are making money. So the first anchored VWAP which I have on SPY and QQQ will be the year-to-date anchored VWAP. It might not be important right now, but you'll see the importance of it when we near that June to July of this year. The price will have a nasty correction on September, only to pull back all the way towards this year-to-date anchored VWAP and find buyers and push all the way back up. So the more you trade, the more you're going to observe all these things down the line. So anchor all these CPI candles when the markets gap up on CPI or PPI or FOMC, whenever you see a massive reactions from the markets, any news events which causes the markets to push up massively or push down massively with good amount of volume, those are the type of AVWAPs. Those are the candles which I anchor the VWAP to. So let's say today is Wednesday, typically, like I don't know if we have FOMC today, but let's say we do. If we have FOMC today at 2 o'clock and the markets just gave a massive green candle or massive red candle after the FOMC, that's the candle which you need to anchor the VWAP to. For instance, 2 o'clock candle from today, if they have FOMC or if the Powell is speaking during that time. So if you want to learn more about it in the above video, there should be a separate video on how to use the anchored VWAPs, and go ahead and give it a try. That is the old version of it. The only difference on that will be the position on where the anchored VWAP is on TradingView. They changed it recently. You can find it right here on, if you go to the left-hand side, it's not an indicator. You won't find anchored VWAP by going to the indicators. The TradingView has it built in. 1, 2, 3, 4, 5. The fifth menu option from the top on the left-hand side. Click on the small arrow right there, and you'll see anchored VWAP right there. Click on it, and then select the candle which you need to anchor the VWAP to, and boom, that's it, simple. You get your anchored VWAP on your screen based wherever you anchored it. The only difference between the regular VWAP and the anchored VWAP is anchored VWAP has price memory, regular VWAP don't. So what do I mean by that is regular VWAP is an intraday indicator. The VWAP resets itself every single day. VWAP opens at 9:30 and closes at 4. The next day, you're going to get a new VWAP. And it opens at 9:30, closes at 4. Market open to market close. That's it. It's an intraday indicator. Whereas anchored VWAP remembers what happened yesterday and carries on that price to today. So anchored VWAP has price memory, doesn't reset itself, and whereas regular VWAP don't. That's the only major difference. And you can anchor the VWAP to any candle you want, unlike the regular VWAP, which is mandatory to start at 9:30 when the market open and closes at 4. I prefer anchored VWAP for the same reason. What's your expiration date? I don't think shares have expiration date niche. So we're having shares, not options. purely just shares on MA. If I take options, trust me, you will know. I will let you know the expiration date. I'll let you know when I entered. I'll let you know the cost average. I'll let you know the stop losses and all those other things. But if you were not there yesterday, we're just talking about the same. Last year, 9 trades on options. So that's it. The entire year, 9 option trades. I count up 140%. So that's all you need. Like you need like 6, 7 option trades per year, and you will massively outperform a lot of other people. You don't have to keep trading options every single day. Not worth it. Where on the candle do you anchor? Doesn't matter. Oh, okay. So you anchor the lows. So if it's overbought levels, it could go back to overbought and oversold. Will go over. Just give me a minute on TOS, but my 5-day moving average on 5 minute is different for QQQ, which looks different from yours. The TOS 5-day moving average calculations will be a bit different compared to that of what we use. What we use is just like typical hard-coded calculations. For every week, there's 1,950 minutes worth of data, and that's going to be different. That's going to be different if you have extended hours on. So the value will be different if you have extended hours turned on for 5-day moving average and extended hours turned off for 5-day moving average, by the way. If you want a proper value, we don't use extended hours at all. It doesn't matter to us. So if you use extended hours, the number of candles that you're calculating the data for is going to go higher, which kind of changes the value of 5-day moving average. If we just remove the extended hours, you'll see the actual 5-day moving average value. On MA, it's sitting at 564, and on QQQ, it is sitting at 533, and on YUM, it's sitting at around, it should be around, let's see, 147. So yeah, remove the extended hours and you'll see the exact right thing on the charts. So you anchor the lows. If it's overbought levels, it could go back to. All right. So the overbought and oversold are one of the most misunderstood concepts when it comes to trading. And anchor revamp has nothing to do with indications of overbought or oversold. I think that's what you have RSI for, relative strength index. If there is strength in the underlying, you'll see the stock price as overbought. And if there is weakness, you're going to see the stock price as oversold. So the goal of trading is not to buy stocks which are oversold so that you can write it back up. The goal is to buy stocks which won't get to this oversold conditions to begin with. All right. So for instance, there will be stock names which will be in an uptrend. An uptrend will never get to that oversold state to begin with, especially on a daily time frame. When do you think the oversold conditions happen? The oversold conditions only happen if the stock price has been absolutely getting hammered by the markets. If it's in a nasty downtrend, that's when you see the RSI go to the oversold conditions. If the RSI is oversold, it's mutually exclusive, right? You won't get an oversold condition on RSI if the trend is to the upside. Simple. There is no reason to buy the oversold conditions to begin with. AVWAP doesn't tell you if a stock is overbought or oversold. AVWAP only tells you, let's say I anchored this candle right here. You see this yellow line on my screen? Let me zoom it a little bit further. This yellow line. So what it's telling you is whether the average buyers who bought this gap up at February 6th, are they making or are they losing money? That's all it tells you. That's all it tells you. The stock price is trading above it. It's telling you that average buyers are making money. The stock price is trading under it. It's telling you the average sellers are making money. Simple as that. So the overbought and oversold conditions, well, has nothing to do with AVWAP as a whole. So there are different ways to trade the AVWAP though, as you mentioned. Can you anchor the lows to see like if the buyers are actually stepping in and so on? Well, you can. There are multiple ways to deal with it. For instance, take QQQ. Take QQQ, for instance, and you can see them making a lows right here on 1011. So if let's say you have that support area right there, like if you remember, this is where we were planning on buying it. I didn't do it because it didn't get back down towards another 30 to 40 cents down. So I just left it be. So now let's say you bought it right here, anchor the VWAP right there. Anchor the VWAP towards that 1011 candle. And you can clearly see every time the price went up and come back down, where did they find buyers at? Exactly towards this anchored VWAP coming from the low. So what you're looking at is whether the buyers, let's say you are one of those buyers who bought this, just like you, millions of others bought the same. Almost like 9,000 contracts been traded or 9,000 shares being traded at this lows. So whether those buyers, are they making money or are they losing money? That's what it's telling you. So every time the price came back to it, pushed up, pull back, where they find buyers, exactly around this handoff coming from this lows at 10-11. So if you're doing something called as reversal trading, these handoffs, whatever you mentioned, is going to come in handy. Did Trump say anything stupid? Why are we getting some volatility right here? Mm-mm-mm. Let's see. Yeah, of course. Trump has expressed interest in a deal that would include substantial investment. Trump would make an agreement with China to also include issues like nuclear weapons. God damn it. All right. So anytime I see these bid to ask going wild, I'm just automatically going to assume that there is some news events which is causing the same. And all right, no big deal. It's good. SMCI. All right. So before we get to SMCI, fine breaking out of ORB with some power. Yes. I just hope Trump doesn't push it back down again. Think they're having a meeting. Keep an eye out. Be cautious. Isn't it usually harder to buy oversold stock and be right versus buying an uptrend? Yeah, that is true. And again, the goal is not to be right versus wrong. The goal is to manage the risk. But the if you buy an oversold stock which is in a downtrend, the amount of gap downs which you're gonna face, it's gonna make it difficult to control the risk. And if you buy a downtrend, and let's say the market gaps down as well, a stock which is in a downtrend is going to be hurt even more. And sometimes you're going to see the stock price gap down right under our stop loss. AJ, you've been with us for quite some time, and it's very, very rare, if you notice, for a stock which we are in to gap down under our stock price. So since 2023 November to right now, I'm pretty sure we took like thousands of trades, correct? In the thousands of trades, it happened three times. One I can distinctly remember. One was CVNA, which was like because of some, what do you call it, share offering, and one with Google because of the chat GPT news. And the other one was with a firm, but it didn't stop us out anyway. So three names, that's it. It's very rare for an uptrend to gap down under the stock. It happens, but as I said, in like almost 1.5 years, it happened three times. But with downtrends, you'll see it happen over and over and over again. So something to pay attention to. It's much safer to just stick to the direction of the trend. And if an uptrend pulls back, the buyers will be waiting to buy it. If the downtrend pushes up, the sellers will be waiting to short the same. So something to keep in mind. It's not a dumb question, AJ. It's a good observation. What does the VWAP in SMCI means? Okay, let's see. Today is Wednesday, right? So right here. So right now I just anchored the VWAP to the 930 candle. So all this VWAP is telling you is whether if the price is trading above the VWAP, the buyers are in control. If the price is trading under the VWAP, the sellers are in control. So right now you can see the price is just doing the back and forth dance. And in order to contract that, just add the ORB highs and ORB lows. All the VWAP is telling you is who is in control of that intraday trend. That's it. End of conversation. And like, don't need to complicate it at all. If the price is trading above the VWAP, well, great. The buyers are in control of the dominant trend. If the price is trading under the VWAP, the sellers are in control of the intraday trend. That's it. Done. Right now, you can see the price is trading above the VWAP, and now wait for them to tag it to see if the buyers are going to step in. And you can see they just rejected the intraday highs at $60. Now, if they're going to come back down, you're going to wait and see if the price can hold on towards the VWAP. And if they hold on towards the VWAP and start bouncing, you're going to start with the small positions. And once they break above this ORB highs, you're going to average up on the same. And once they break above the $60.30, that's when you're going to get rid of most of your positions. That is a trade plan. And now let's say they just break down under the VWAP. If they break down under the VWAP, your stop losses should go right here at $60.30. on the short positions, and where you'll take the profits, first set of profits, or use this ORB lows as a tool to average up once they break down under 57.50, and you'll close the entire positions once they get towards this lows of $55.67. All SMCI did was came all the way back down to fill this gap and pushed all the way back up again. That's all they did for today. So now, what's the VWAP? Simple as that. What do you think about Riot shares? I don't trade crypto. I don't do anything, any names associated with crypto whatsoever. So, but I can still look at the charts for you and let you know. Nice consolidation though. On the daily, I'm pretty sure weekly will be more cleaner. Okay. Maybe perhaps wait for them to get back over this 1250 to 1260 zones. You can set some price alerts at 1250 to 1260. If they can get back over, that will be great instead of buying it right here because they're under the declining 20-day moving average, under the 50-day moving average. Nothing is happening at this moment. It's gonna waste your time, waste your money, and do absolutely nothing. It's not something which we need to be involved ourselves in at this point. I wouldn't do it if it was me, but if I want to enter this, I would much rather wait for them to crack above this 1261 and zone. At least a daily candle close about 1260. If they can do that, then the small positions will be there. Stop losses will be at 1080. And I'll just average up to as they push us up and takes the first set of profit at 1471, the second set of profit at 1580, and leave some runners on the table as they continue to push towards this 19 to 20 zone. That sounds like a plan to me. ULT or UTI? What do you mean? UTI, yeah. Figured. Good looking name. Don't you have this on the watch list though? Josh was talking about it a while back. We were waiting for them to recover the 5-day moving average, no? Yeah. All right. So UTI, what we were waiting for was the 5-day moving average to start sloping to the upside. Right now, it's flattening out a little bit. Good looking chart. It will be ready mostly by tomorrow. And once it's ready, we will take it. There's a good looking name, nice uptrend. They just came back down to run a test towards the 20-day moving average, and now they're pushing back up. Good name, good chart, and maybe most likely by tomorrow. If the price didn't do anything funny today into close, a 5-day moving average would start flatten out and start sloping to the upside, and we can just take our initial positioning tomorrow on UTI. Sorry if this been asked, but how do I get the VMAP on my trading view? You mean VWAP, WAP, VWAP, right? If you're asking for VWAP, if you're looking for a regular VWAP, you can just get it through the indicators right here and just search for WVAP right there. The first one which you look at, that's the VWAP. But if you're looking for anchored VWAP, it's even more simpler. You can just 1, 2, 3, 4, 5. The fifth menu from the top, select the arrow right here, and you'll see the anchored VWAP right there. Just click on it and select the candle you want the VWAP to be anchored to, and there you go. Simple. So if whatever I did was fast, this video is recorded anyway, so you can just go back and see whatever we did. I explained it already before in detail, so you will find it in this recording once you play it back, once it's been posted, all right? Any chance I could take a look at what statement will concurrently solve green term to expiration 28? Okay. Define overstaying your welcome. You violate your own plan. Is that what you mean? Still a good looking chart. It's a nice uptrend, good looking name, but a bit extended, but the trend is still to the upside. I would be interested if they can come back down towards this 413-ish and change before buying more into it. Let's see. There is a 5-day moving average sitting right here at 442. And if they can get back over it, it'll be nice. The only problem is You can see right here, they've been like consolidating for quite some time within this box. If they break down under this box, I don't think the 5-day moving average is going to do us any good. Most likely scenario, we're going to be in logging up higher low recently. Higher low log is possible. Maybe perhaps towards this 413s, maybe towards a 20-day moving average. That's what we'll be expecting. Let's see how it goes. Could have sold with a profit. I hope it's around 558 to 560. 558 for crowd. You don't have that much expiration to hope for 558 and 560 though. Like your expiration is on 28th, which is next week. Around next week, yeah. So which you're expecting for 34, sorry, around 27% move after this rally. Like they just rallied from 385 all the way towards 454 in like matter of 18 days, which is 18%. So you're expecting another 30% rally from this zone. It's unlikely, probabilist from a probabilistic standpoint. 458. Oh, all right. Like, I mean, well, I almost got it. Like just $3 under. So they're just consolidating here. So if you're long at the zone, and the only thing which you need to be worried about at this point is just make sure this is not a distribution channel. Distribution channel in the sense like once the price has been going on an absolute rampage, you'll see the price consolidate for quite some time. That is what's happening here. And it can be interpreted in two different ways. Number one, this can be an accumulation phase before the next push to the upside, or this can be a distribution phase before the next push to the downside, or the reversal in an uptrend sort of phase, correct? So here, just hope that it's not a distribution phase, because if it continues to keep pushing through, and if they break above this range, let's say around 456 or 460, if they continue to push through, that's great. Watch the VWAP for the day. And if they can break above the VWAP, well, great, hold on to your positions. But if they cannot break through the VWAP, well, look for re-entry down the line later, right? If you haven't entered anywhere before, better to always cut it, look for re-entry down the line. It's good. Just watch the VWAP, simple. How do you know whether it's an accumulation? You don't. That's the thing. You don't know if it's an accumulation or distribution until after the fact. So you can get the probabilities of what it might be by looking at the daily charts. Always ask yourself, where did it come from? Where did it come from? Simple question. So right here, if you go to the daily chart, you can see they started their rallying from $384. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 back-to-back green days, by the way. 11 back-to-back green days, and this is the first red day they're having after 11 trading days of green. Are you even surprised that they're pulling back at this moment? Absolutely not, because always ask yourself, where do they come from? So now, what are the odds that this consolidation, they're just consolidating before some decent pullback to the downside to get a higher low? And even if they pull back, it's still going to be bullish because they're still above all the major moving averages. Like you have a 20 at 414, 50-day moving average is 332. Even if they pull back from here, that is still great because it's still going to be in an uptrend regardless. But it'll be healthy because whenever you see these massive rallies to the upside, it's good to have some sort of consolidation before the push up or to the push down. So we've been having this consolidation for 3 trading days. It's good. Most likely distribution, well, most likely accumulation as well before the next push up. This is just consolidating, and maybe they're just building energy before the next push up. That's exactly why I said we don't know. We don't know if it's an accumulation or distribution until after the fact. And we can't even say it's most likely distribution because the price is still above the 5-day moving average. We will get more evidence it's distribution because, like, let's say the 5-day moving average is sloping up, and you'll see something like this happen where the price goes up and then like gets back down under the 5-day moving average, and then the 5-day is just starting to slope to the downside. This is when you know, when the price tests the 5-day and then reject the same, then you'll know, all right, this is a distribution phase and it's time to like take some profits off the longs. because they are going for a move to the downside. For now, give the trend the benefit of the doubt, and yeah, it's innocent until proven guilty. 133 call option expiring Feb 21. Should I look to sell today or when? What was your plan when you got into this trade? What was your risk? If that option goes to zero, how much of your account will you be losing? You don't have to answer all these to me, but these are the things which you need to know before you click on that buy button, correct? So if this option completely goes to zero, how much will you lose? How much percentage of your portfolio will you lose? Is it more than 2%? Well, if it's more than 2%, or let's say, I'm pretty sure most of you here are all trading options. So if you're trading options, let's call it 3 or 4%. Is it more than 3 or 4% of your entire portfolio if this options completely go to zero? And if that's the case, well, there's no point in holding it. 133 call options and look like Nvidia is having a decent day today, a positive almost 0.5%. And if you got a 133 call option, you should be at least in the money right now. I don't know when you bought it, so you should be in the money at least by $7. And it's doing good. Nvidia is looking a tad bit decent. They filled that gap. So let's see if you have multiple contracts and if you are in profits, there's nothing wrong in taking some off the table and moving your stop losses up towards break evens, because the more you hold on to it towards expiration, the less money you're going to be holding on to, because the theta, I'm pretty sure you have intrinsic value and extrinsic value in your option because it's $7 in the money. And the theta is only going to affect the extrinsic value as a whole. So if you're in profits, nothing wrong in taking some off the table and leaving some runners on the table by moving your stop losses up towards 137, this lows right here. So if you see Nvidia breaking this lows, you can just close the entire position and for a nice chunk of change, depending on where you got it. What are the top 3 indicators that are used? I don't have the statistics with me on the top 3 indicators which are being used by traders, but it's subjective in nature. And the way we analyze the price doesn't really matter, because if you use EMAs and if I use SMAs and if someone else uses VWAP or AVWAPs, and if we all analyze the same chart at the same time, guess what? We're going to come across the same exact levels. So that's why technical analysis works. So it doesn't matter what indicators you use, and your profitability has nothing to do with the indicators that you use. The profitability and consistency has everything to do with your position sizing, how you manage your positions, how you control your risk. So if you are using an indicator, if you're learning an indicator, stick to that one indicator alone instead of jumping from one indicator to another based off of whatever you hear. That goes even with me as well. I'm pretty sure if you're just tuning in right now, you'll be hearing about anchored VWAP, you'll be hearing about 5-day moving average. And if you never heard of it before, that's fine. If you think this style of trading suits your psychology, you can look into it. But again, it's not for everyone, is it? So how I trade is boring. So we just open a position, set our stop loss, and move on with our life. And if it works out, it works out. And when the opportunity shows up, we just average up. And this style of trading gives me more control over my positions and more control over my psychology, more control over my emotional and mental state, and also helps me massively with the performance to outperform the broader markets. So, and some of you are more risk averse. Some of you like to trade options and are willing to like risk 10-20% of your account in a single trade. And again, if that's what's for you, that's what's for you. So stick with it. Don't don't correlate indicators with profitabilities, because that's not how it works. If you ask me, my top 3 indicators will be AVWAPs, 5-day moving average, and what else? Volume, I guess. So see, I don't even have top 3 because I don't even use those 3. So just like AVWAPs and 5-day moving average, that's it. And you can just put 5-day moving average senior as part 3. So yeah, whatever. All right, sorry, it's good. UTI, will get into it tomorrow. And all right, thank you for explaining. That's all right. We are rejecting the overnight VWAP on NQ here. Can you explain your trading strategy tomorrow? Yes, sure. No worries. Let me give you a gist. We only trade uptrends. We don't buy downtrends. We don't buy anything which has a declining 50-day moving average on the daily time frame. And what else? We don't buy anything which has already rallied like 20 to 30% when we look at the chart. And we don't buy anything if we don't have a proper area to set our stop losses on. We don't buy anything related to crypto. We don't buy anything related to oil or energy. So simple. That's it. So these are all certain set of rules. It can seem like a lot, but in reality it's not. It just helps me prevent those unnecessary drawdowns in the portfolio. That doesn't mean I don't lose money. We still lose money. We're still wrong most of the time. And people who've been trading with me for quite some time knows like we are wrong, and every 10 trades we take we're wrong on like 7 of them. So we only win on 3, but those 3 wins is so huge that it doesn't even matter. It's gonna wipe out all the losses of just not just the 7 trades, but also gonna put our portfolio in the profitable territory again. So it doesn't really matter how much trades you win, and it all that matters is what's your win rate, what's your R&R, risk to reward ratio. And if your risk to reward ratio is 3 hours all the time, you win. So it doesn't really matter. Why not oil and energy? Yeah, because I don't trade oil and energy. There's no prejudice against it. It's just not for me. Energy names is just not for me. So anything which moves with news in the overnight, and I don't want to keep looking at these OPEC news and what they say and what they do and all those other stuff. It's too much headache for me, and I would much rather just prefer to sticking to the stocks that are in an uptrend. And there's a lot of other names in there compared to the oil, energy, and crypto. So just not for me. It's just a preference thing. I just don't do it. Simple. There's no particular reason. Just I don't like to keep focusing on the news events every single time, waking up overnight, and then the next day the market just gaps down. The energy sector just gaps down for no reason. Doesn't worth it. Common sense is very uncommon. Well, in real life as well. It's true. Got your eye on UTI? Yes, George, we just spoke about it. We just spoke about it, so we're just waiting for the 5-day to flatten out. That's what we're doing. 5-day to flatten out and start sloping to the upside. So if they do, we can set up our initial positioning. It'll be ready by tomorrow. Garmin? What the hell is Garmin? Let's see. Nice cap. Interesting. Oh, this is nice. It's good. So good looking name, good looking chart, and maybe what's the ATR? ATR. What are you? $6.45. Interesting. So if you're gonna enter this right here, maybe perhaps it stops at 235s. That might work. A 235 stop loss and or 234.50 stop loss works as well. And you can just take profits as it continues to push through. Or you can just average up as they continue to push through. This is an all-time highs now. Yep, this is an all-time highs. Great looking chart. So MA slowly coming back up and testing the VWAP here again. So we'll see if they can hold through. And if they can push through, it's great. And it's a good chart, man. If you're going to enter, stop losses no lower than that 254 zone, GRMM. Sorry, 234-ish. That's where the stop loss. Yeah, 234.50. No lower than that. And initial risk shouldn't be more than 0.4% as usual. So let's go back to QQQ to see if something good shows up. And the answer is no, nothing. Just still in this chop zone. EQT, it's been a while. $55. Nice gap up. What's the volume in this? 6 million. Interesting. Okay, so why do I have lines on this? Have I traded this before? Seems like it. What's the stop on a firm? Yes. If you're just waking up, Josh, trim the affirm. Like take some off the table. Like we reduce the sizing to that. Remember 0.3% which we have left. So we removed it to like other half when we opened MA. So they're testing the ERAV VWAP right now. So if you haven't done it, don't do it right here. Don't do it right here. Look at how they react around this ERAV VWAP, and if they start bouncing from here, then we can average up again once they get back above the 5-day moving average. So they're testing the ERAV VWAP right now at this moment. So if they start bouncing from here, focus only on that. We'll see how it goes. We need a push up from here and then above the 78.35. That's what we're expecting. Should I buy more? Oh, sorry, man. I was distracted. EQT. Should I buy more EQT? Not at the moment. Let them recover the VWAP, please. So if they recover the VWAP at around 55.60, then it's gonna give you more opportunity to add more into it. So they are under the VWAP right now. So holding on towards the ORB lows right here, but finding buys at the ORB lows. If they can get back over the VWAP at 55.60, you can. And what's the ATR on this? Let's see, ATR is 173. Perhaps the stop loss is at around here, 53.60-ish. 53.50 should be the stop loss. No lower than that. Don't go lower than 53.60 or 53.50 as a stop loss, because if they come back down to fill this gap, a daily close under 53.50 will be nice. That will be a stop loss and average up once they get back over this VWAP coming from the day. So at least a 2-minute or 5-minute candle should close above the VWAP, and you can just use it as an opportunity to average up on the same. And for a firm, like wait for the daily close. If they close under the ERA VWAP, close the entire positions. The runners will be shut off. So let's see, MA flat, not doing anything. YUM flat. As long as you trade above the 5-day, that's all that matters. Bros flat, not doing much. SPY flat, not doing much. QQQ flat, not doing much. HWC, let's see, are they above or below? They're under the 5-day. Like I'll most likely just close this entire position shortly, because it's not doing anything and just wasting our time. It's been almost what, 2 weeks of absolutely nothingness. It's just wasting our time and the risk, taking unnecessary risk from our portfolio. So give it until today. Give it until today, and if they're not performing anything, if they're not doing anything, we can just shut it off. Not worth it. It's just opportunity cost is piling up. If you trade LLY, what's the resistance? More about me trading LLY. We can still look into it. Nice. Starting to look good, bouncing from the 200. There's a gap right here to be filled at 903, consolidating right under it, which is good. About the 5-day from the looks of it. Should be about the 5-day. Let's see. Yep, about the 5-day moving average from this move as well. And let's go to the 65 minutes to see if we can find an intraday area to keep an eye out for. And if you're just trading for intraday, and they already looks like they already moved one ATR from the entry. What's the ATR on this? Should be somewhere around $30 and change, right? $22. Yeah, keep an eye out for 879. That will complete the one ATR move. 879 will complete one ATR move. But if you got in at the open, you should be trimming here. Start trimming right here and almost get rid of most of your positions at this 879-ish to 880 zones. By that time, you should only have runners left on the table. Runners left on the table with stop losses moved on those runners towards break evens, so that if they continue to keep pushing up, you still have the runners to make you money, and you'll still be making money as it continues to keep pushing higher and higher and higher. But if it still stops you out, you still took some profits off the table, and you can still close your runners for break evens, and the overall trade will still be closed in profit. So this is something of a position management which you need to be aware of. So one ATR in the sense the expected move. Expected move will be done once they hit the 878 to 879. Don't wait until it gets to that 879. You need to start taking profit as it gets near there. What percentage should we keep as runners? It depends on your initial sizing, that is. For instance, like if you got in with 1% risk, all right, let's say you buy 100 shares on a position and you set a stop loss at $2 and the stock moves up $2 from your entry. And once that happens, well, you need to get rid of 50% of your positions to cover your initial risk, which means you made what you could have lost if you gotten stopped out in profits. So once that happens, you need to take out 50% of your positions and move the stop losses on the other 50% to the break evens. So down the line, you're going to see these. So for instance, a firm right here. So this is a live example of what's happening right now. So initially we got involved and we averaged up to 0.6%, and we sold 0.3% of our positions, half of our positions once it hit $80, and the other half was set at 83. Well, guess what? They went all the way to 82.50 and blue balled us. Now all the way back towards the $77 again. So now the how we manage the 0.3%, the final 0.3% positions, it's pretty simple. You're going to wait for today's close. They're testing the ARAV VAP. And now if they could go back and close the day above the 78.30, we ain't going to make any changes to our runners. But if they cannot hold above this 76.50 right here, well, we're going to close out the runners and we're still going to close the trade for somewhere around 1.5 hours overall because we already took profits on half of our positions at $80. Pretty simple. So sometimes it will happen. So this is why moving our stop losses up makes so much sense because we don't know what the markets are going to do. Let's be real, regardless of the indicators which we use or whatever it is, we don't know what the markets are going to do. Protecting our initial risk, protecting our capital is always, always the first priority. Something to keep in mind. Blue ballers, yeah, indeed. Imagine this, like 82.50 exactly. Tagged it and then completely gave everything up. Well, happens. So the person, oh, I don't think I answered the question. I just got drifted off. Percentage of runners, it's pretty simple. Like initial position, if you risk 1% of your portfolio, and if you took profits at 2 hours, 2 hours in the sense when the stock price moved 2 times your stop losses and profits. If you took and I will always leave like 0.2% of the risk in runners until the trend changes. The 0.2% will be the last final runners. So if I get stopped out for break evens, well, that's only going to be 0.2% risk of my entire portfolio. Yep. So let's see a bunch of options, a bunch of questions right here, and we'll go over one by one. And Baidu, well, Chinese names, interesting. Would you wait for Baidu to clear 106? Mm, mm, mm. Baidu needs to get back over $91 for me to even consider it. So these are what we call ADRs, by the way. ADRs in the sense these stocks trades in multiple markets. So if you look at the daily charts, you'll see a bunch of gap ups and gap downs over and over and over. Why do you think that is? That is because they trade in Hong Kong index and they also trade in our index as well. So if something happened with CSI 3000, which is the Chinese version of S&P 500, well, you're going to see an impact on the Nasdaq Open as well on all these Chinese names. So it's going to gap down or it's going to gap up, which makes setting the stop losses a huge pain in the ass. One of the main reasons why I don't touch these names, regardless of what happens. If you got a call option and if it works in your favor, great, fantastic. It just gapped up to a crazy high extent and you're going to make a lot of money. The problem is if it doesn't work in your favor, you're going to lose almost all of the options premium with that one gap down because they usually gap down 2 to 3% from the open. Not worth it, at least for me. So they are testing the 50-day moving average here, but still under the declining 200. It's one of the main reasons why I don't trade anything with a declining 200. And one of the main reasons why we didn't open anything on SMCI yet, because shit like this happens. They'll go back above the 200-day moving average, but it's still declining at the end of the day. Slope of the moving averages matters more than whether the price is trading above or below it. So the slope is still to the downside. So let's see if they can push back up. And if you want to enter Baidu right here, wait for them to clear this $93 zones, and you'll have more than enough time to establish. The goal is more than enough time to establish your positions. Remember, the goal is not to buy the bottoms. The goal is to buy the strength once you see buyers stepping in. Be patient. It's still under the VWAP, doesn't really matter. 94 and above might give you a decent opportunity for a trade. Usually, Meta. Can we get in Meta now? What's the time frame? What's the time frame on the trade? Are you looking to swing trade? Are you looking to day trade? What are you doing? And in the morning, we discussed about this 20-day moving average tag at around 593 and change. They're still under the VWAP. No reason to get involved for longs right here. Still, the ORB lows and the VWAP are at the same exact place. Maybe wait for them to clear the 700 zones. And once they clear the 700 zones, we can deal with it down the line. If you want a long, that is by at least like 2 minutes or 5-minute candles should close above 700. So if they do that, your stop losses will be at 697. So you'll be risking somewhere around $4, and your targets will be at that ORB highs, which is around 706. Do you usually open positions in the beginning of the week and close / average up accordingly? Close tips? Nope. I don't have a particular time frame that it's Monday, I have to open positions. Oh, it's Friday, I have to close the positions. Nothing like that. If it sets up on Friday, we open the positions on Friday. If it's set up on Monday, we open the positions on Monday. And the longest we held our positions was somewhere around 4 months. That is for roadblocks, for runners. We entered at 52 and we held it all the way. We sold most of our positions by around $63, $64 and leaving the runners all the way towards 75. So as long as the trend is intact, we're going to hold on to our position. So I don't have the time frames like that. My time frames on the trade is dependent on the underlying trend. And if it sets up on Friday evening at around 3:50, I'm going to take it then. If it sets up on Monday evening 3:50 or Monday morning at 9:32, I'm going to take it then. Depends. It depends on the setup. I don't have a time frame like this is when I trade, this is when I don't. Especially when it comes to swing trade. That is for day trades, I won't trade anything up later than 11:30 anyway. So most of the swing trades which you open also comes before 11:30 regardless. So it's very rare for us to open anything after that. But I look at it like 9 to 5, and there's no reason for me to keep looking at the charts after 11:30. So once 11:30 hits, I'm done. I'm out. How do you trade or design its stocks? Yeah, this I made the video on. I'm sorry to direct you to the video instead of explaining it here, but believe I did a good job in explaining the same more in detail rather than me going over the same thing over and over right here. So these two, first video goes over how I built my own watch list, and the second video goes over how to swing trade the same. So I will go over it today evening if I find time, and I'll go in detail of the same, but it's something which I spoke about 100 times already, so it will be boring for people who listen to it over and over and over again. So go ahead, check out this video. I think I did a good job explaining the same over there. If you have any questions, feel free to reach out. I would be happy to go over the same in detail with you later down the line. My rules are pretty simple. The first rule is don't trade downtrends. Simple. I don't buy downtrends. Doesn't matter if they go up like $30 from the lows. Doesn't matter. Downtrend, guilty until proven innocent, and just stay away from it. Simple. When do you use credit or debit spreads? When the VIX is about 30. VIX is about 20 to 25-ish. When the VIX is about 20 to 25-ish, credit spreads. When the VIX is near 14, 13, 15, or anything under 15, debit spreads. Because the more volatile the stock is, the more credit you're going to get with credit spreads. And when the markets are not that volatile, you're not going to get as much credit. And the thing about volatility is they always revert back to mean. So if you're using debit spreads, best time to use the debit spreads is when the volatility is low. For right now, if you notice, where is VIX at? Let's take a look. VIX is currently at 1559. All right, that's where the VIX is currently trading at. So let's say you're expecting the volatility to kick in into the later part of the March. into leading into the March. And this is the time where you need to be opening some debit spreads, by the way. So when the market starts getting more and more volatile, the premiums, the IV is going to expand on the QQQ and SPY. So when the IV expands, these positive Vega strategies are going to expand alongside with it. You're going to be making that 100% really quick with debit spreads as the IV starts pushing to the upside. Now it's the opposite with credit spreads. So let's say the VIX goes all the way to 25 leading into March. And now you buy a bunch of credit spreads right there. And now let's say the market starts the uptrend. Now you got a bunch of put credit spreads over there and the market starts pushing back up. And as the volatility fades away, as the VIX goes all the way back down to 15, the premiums and options, the IV is going to decrease. And with the IV decreased, when the IV decreases, you're going to be making that 100% on your put credit spreads at a much faster rate compared to that of opening a put credit spreads right now. So understanding which strategy to use in which market environment is pivotal. And this is when you use the debit spreads when the volatility is lower. This is when you position yourself on debit spreads. And when the volatility peaks at around VIX 25 or VIX 30 or whatever it is, that's when you start using credit spreads, any credit-based strategy to collect as much premiums as possible during that time. Hope that makes sense. Look into positive Vega strategy and negative Vega strategy, and you'll get more about the advantages and disadvantages of when to use what. Just put in the chat, so go ahead, check it out. And Q, looks like QQQ is testing the ORB lows. Interesting. Is it ORB lows today? Oh, that's Tuesday. My bad. There's Wednesday. 9:30. Yeah, sorry. Breaking about the ORB. Thank you so much for your appreciation. Yeah, no worries. ORB highs, correct. They're above it right now. And with Tesla, what's going on there? So this is a good lesson on ATR as well. $18, 18371, one. Beautiful. So they rejected the ER VWAP and now they are under the intraday as well. Interesting. Where's the 5-day moving average? 5-day moving average is starting to slope to the upside. Tesla might be preparing for a shorter term swing trade at least, but I'll give it some time. It's fine. GRMN is looking good, man. So it's great, testing the highs of the day. So we'll see where it closes. That matters more. Spot still under the 5-day. Let them recover it. Then we might have a potential trade in our hands. Spot, MA, all these are similar, exact same setups, by the way. AVWAP, pure AVWAP trades, trading at all-time highs, just back and forth, doing the back and forth with the intraday ER AVWAP. So looks good. So we'll let them clear the 5-day moving average. Tomorrow, once they clear the AVWAPs, we can look into it. So with that being said, thank you so much for tuning in. Really appreciate it. And if you guys have any questions, feel free to ask, and I'll talk to you guys tomorrow. It's a bunch of new people today. Really nice meeting you all, and hope to see you all again tomorrow morning. Same time, same place. Have a good rest of the day. Take care. Bye-bye.